Hello, my Teaserking family. Sorry for the interruption. I saw I froze and then I got the delete and I went on and I saw the circle and I said, okay, I better go. So I am back. Let's continue where we left off. So we see the Dow down to 38.6, going down, down, down. It was 39, 38. 38.6. And then we looked at Bitcoin and it's down to 77. All right, so this pulled up a little 78. Silver right about 30. All right, gold 29.98, so it's roughly 3,000. So again, what's happening? Really, it's the gold and silver are just the derivatives going down. Nothing to worry about. If you have physical, it's going to go to the moon. It's still going to go to the moon. Nothing's changed. You need money because you're selling the stocks. So you need money to sell them if you're on margin, and that's where the gold and silver comes in. Anyway, so as I was saying, you Bitcoiners, all right, Bitcoin at 77,847. That's really volatile. It was this 78. Okay. So at 77,847, at what point do you worry? With gold and silver, we don't worry at all because going down is just paper and it's just to cover margins. But maybe that's what's happening in Bitcoin. Maybe they're selling to cover margins. But we don't know what Bitcoin is. So therefore, at 70, okay, so it was 105 and now it's 77. At what point do you worry? At what point do you go, shit, I better sell it? Or are you even that organized that you have a game plan in mind? Or as I hear from people, well, I buy Bitcoin just because it's going up, I buy it. With no plan at all. That's like betting a football game. Well, that's like betting yesterday's game, right? You just bet. Who you betting? Well, I'll bet Florida just because. We bet the under because of the defense. We had a reason. Bitcoin, what's your reason? Well, I don't know. It's because it's going up. So I'm just going to go along with it. I don't know anything about it, but I'm going to bet it because it's going up. And you go, okay, sounds stupid. So everybody's in Bitcoin who has no idea about finance, economics, how to gamble, only because it's going up. We do not buy gold because it's going up. We buy gold because it's extremely limited. It's extremely high in demand. All the BRICS countries need gold. So we buy gold because of those reasons. Low supply, high demand. That's why we buy gold. You have to have a reason to do it. Why am I playing poker? Well, because I see guys on TV make money at it. Yeah, but why are you playing poker? Why did you call that bet? Well, I had pocket sixes. I thought that was good. But didn't you see the ace and king on the board? Like I was at MGM with a buddy of mine from the pool several years ago. He gets pocket jacks. So he doesn't know what to do. He bets a little. He gets called by a few people, which tells me that they're playing aces, an ace or a good pair. So the flop comes ace, king, 9 or ace, king, 8. And somebody bets, and the next guy calls him. And he's looking at the jacks, and I look at him, and I go, time to say goodbye. Well, I got jacks. Yeah, but I guarantee you one of them has aces, if not both. They called your raise and the fact that an ace and a king hit the flop, and that's hold'em, is using the flop. So if I'm only going to play, to a raise, I'm going to play an ace or a king, and the fact that an ace and a king hit, you're in third place. So he folds, but he got stuck on his own pair of jacks. He wanted to call, and I said, no, you got to go out. And he looked at me. You better be right. And at the end of the hand, one guy had aces, the other guy had aces. Then he said, now I get it. And so you have to understand why you're doing anything. And this is the thing. We understand that this has no value because it's printed too much. We understand the higher supply means the lower value. We understand that the reason this has a value is because there's 400 Kurt Warners, right? There's 400 of these refractors. If there was 4,000, it would be worth nothing. We understand the reason this is worth $80,000 if it's a 9, or more if it's a 10. It's because it's limited. There's not a lot of Willie Mays 9s. Now, Willie Mays gives you the demand. PSA 9 gives you the supply number. And a PSA 10, there's probably 10 of them, would make it $1 million card because there's very little, but the demand for Willie Mays is still there. But the demand for Willie Mays 10 is even higher because they know it's very low in supply. So you have to understand your concepts and your theories of why you're playing a game, why you're betting on this or that. You have to know all that. And so as we look at the stock market, so I'm going to ask the same question. The stocks are at 38.7. At what point do you sell? There's tariffs. What's a tariff? It's so let's talk tariffs. So what's a tariff? What do you think a tariff is? Why that word? Well, tariff is you're charging the producer who's selling it to you. So if somebody's selling you gym shoes, normally you pay the tax on it, right? You pay the sales tax. That's you paying, the buyer paying the tax. A tariff is the seller paying the tax. So if I'm China and I got to pay a 50% tariff on things that I'm selling to you, that's what I'm doing. So now, doesn't mean the cost going up, doesn't mean I pay for it. All it means is China's cost has gone up. They're the ones charging, which takes effect. It basically kills the amount we were saving. That's why did we buy goods from China? Everybody talks about this trade imbalance. They're all full of shit. It's meaningless. All a trade imbalance is when you have right now we buy more from China than we sell because China does subsidies. The government subsidizes most of the shit we buy from them, and therefore it's cheaper for us. So because the goods from China are cheaper than from the other countries, when we're at Target or Kroger's, we buy Chinese goods. I don't even know if we realize that, but we're buying Chinese. We're buying whatever is the best price. So we buy, it happens to be Chinese. Who cares? The point is the consumer saves by buying it cheaper. What the tariff does is it adds cost to China to send it. China's the one that pays for the tariff, not us and not the consumer. Now, does that mean they charge more? Like they're going to say, well, my tariff went up, so you're going to eat the tariff if you want me to ship it. Well, not necessarily. You could pay the tariff for them, or maybe you don't. I don't know. I wouldn't. That's your problem. However, then I won't get the good. So what's going to happen in our markets I don't know if things will be more expensive because, again, we control the price. We're the market. But what happens is China's getting a cost increase. Trump's doing it to pay off the $37 trillion debt. because if he raises our taxes, it slows our economy down. Tax increases are the worst thing you can do to get your economy going. You need tax decreases. As I said in part one, you're trying to pay your debt. What was I thinking? The economy slows down if you increase taxes on us. So if you make our tax rate 20 to 30%, so now it's 30, that's more tax money goes to the government, which they don't spend it wisely, and it's taken us, it slows the economy. So the best way to get the 37 trillion out of the economy is to not charge us any tax, which is what he's doing. So in his mind, he's trying to get the 37 trillion gone by cutting our taxes and then doing tariffs on the other countries to let them pay the 37 trillion in debt that's responsible by terrible spending by our government, mostly the military complex. So when we give all these billions of dollars to the Ukraine Act, that's part of the 37 trillion. Why should China pay for that? So what do we do? Right? The real way out is gold, and mark gold up to 100,000 an ounce, and then you get out of your 37 trillion. Gold will get you out of it. That's why we buy gold. We buy gold for the freedom. I was explaining that to Alyssa yesterday, and I said the money's worthless. We gave her this sheet, and on the bottom of the sheet, to become a financial power, you need low taxes, you need free trade. Most important, I write, is free trade. That means zero tariffs, not huge tariffs. You need a strong rule of law, which we don't have. We have corrupt, stable money, which is gold, and good communications and a military. She got it. We don't have free trade. Free trade's the key because you get your items cheaper. Because China can make things cheaper than we can make it because our wages are much higher. Nobody wants to come here and put a plant, and they all want to go now to India and Vietnam, the low income, the low producing countries, right? That's why we were at China, because you could pay people $1 a day. Here, with the unions, it was $25, $30 an hour. So that's why then you had to have packaging and you had to add shipping and still see if it was still cheaper than what you had to pay the employees. Then we went to robots and all this crap. AI will never work. AI can never think the way I think. It would never happen. They can't analyze, and you can't teach it to analyze. And we're not going to have Terminator and Terminator 2 where they're going to start killing us. That's probably their master plan, but it'll never work. Anyway, so that's what it is. So the tariffs are China paying. Will it raise it'll raise, are they going to bake it in saying, if you want our goods, you're going to have to help us with the tariffs? So GM and Ford and whoever else, golf clubs, tennis rackets, gym shoes, they'll have to help them with the tariffs. Now that increases costs, but does that increase the price? As we say, doesn't necessarily. What will the market sell the price to be? Just like Coke went on and they just did a tax increase on the 2 liters. I saw $3.65 a 2 liter. They can do it, but nobody's going to buy it. I saw my dark chocolates the other day at Myers, and they used to be like $2.69. They went up to $3.59. Now they're $4.59. And all of a sudden, it's buy one, get the second half off. And now I'm not doing it. It's like $3.50 now. No, that's too high. You're not going to sell any dark chocolates. I know it's very healthy for us, the 90s and the 85s. I just go to Myers. I go to Walmart, They have this other kind of dark chocolate. It's Swiss and it's 250. So I will substitute and go there after swim. It's close to the swim, and I will go there and get it. And basically, that's what'll happen. So Lint and Chevalde can raise it to $20 a bar. Nobody's going to get it because the competition's sitting there at 250. And dark chocolate's dark chocolate. It's also 90. It's also the good cocoa. I have no reason to. I'm not going to spend without the thing 450 and with buy one get one half off. That's still 350. Fuck that. I'm not paying that. That's how the market works. If nobody buys it, they got to lower their price. Or buy one get one free. Okay, now it'll be 450 for two. Will be 2.25. Okay, now I'll buy them because I buy two normally anyway. I have a couple of chunks every day, but that's where I'm at with it. So just because costs go up doesn't mean the prices go up. And I'll show a video of China where basically it's empty. Now, is it empty because everybody's moving to Vietnam to put up factories because the tariff is better? So this is where Trump's making a huge mistake. First of all, what did I show you? Number two, free trade, most important. He's not doing free trade. Secondly, he's tariffing China. So if I'm China, so what he wants is everybody to move here, but our labor is way too expensive. They can't do it. You don't just move a card factory or a steel plant to Michigan. I mean, Mercedes put a plant in South Carolina, right? Because there's no union there. So nobody's putting anything in Michigan. It's just too expensive. Because at the end of the day, we set the price if we buy or not, and you're making it way too expensive. So I don't know where this balance comes in. Well, if they sell $1 billion worth of Toyotas here, we should sell $1 billion worth of GMs in Japan. Doesn't work like that. We don't care about it. It's what's the best for the customer is us. So we don't want tariffs. We don't want their costs going up, and we don't want the price to go up. So again, who pays for the tariffs? The country making the goods, selling it to the U.S., not the U.S. manufacturer, and not us, not the consumer. We don't pay the tariff. So if it's China, it's paid by China. Now China can sit there and have all their plants moved to Vietnam or Hong Kong or Singapore, and if there's no tariffs on them, they sell it. That's what they're doing with Mexico and Canada. They were shipping everything to Mexico and Canada were putting it together, selling it to the U.S. That's why they're tariffing Mexico and Canada, because it's really China, not really Mexico and Canada, who is shipping all the goods to us. So China was working around it. Russia does too. They'll put up a Norway flag on their ship and say, hey, it's not a Russian ship. It's a Norwegian ship. So there's ways around it. And so we're going to start getting a lot of stuff from Vietnam. Now, it benefits us, which is good for the economy, but Trump can't figure that out. So Trump's going to sit there. Why he wants it even, you don't give a shit if it's even. It doesn't matter. That's not the point. The point of running the economy is you want these low prices is the point. With the low prices comes it benefits us, which benefits our economy because we have more money to spend everywhere else. That's the point of it. Not, oh, well, if we buy $1 million here, then China's got to buy $1 million from us. That's got nothing to do with anything. It's the stupidest rhetoric I've ever heard. It's got nothing. You don't care about even. It's not about being even. It benefits the consumer if it's cheaper. That's the key, which then stimulates the economy, because then we go buy more, because gym shoes only cost $10 because they're coming from China, and not $100 because they're made by people in California. We don't necessarily need people to make them here if the benefit is when we buy them cheaper, we have more money. And we get into technology. So now we have more programmers and, AI people, or whatever they want to do. That's really the key. We have more time to watch baseball. So that's really, this whole tariff thing is a bunch of idiots talking. Unfair trade balance. Who cares? We don't care if we have a trade imbalance or not. The goal is to grow the economy. The first goal is to not fuck with your money and not print it to death. This is the root of the core of the problem. You printed this to death. Why did this never have a problem before? The only time tariffs had a problem was in 1929, 1930, which was the Great Depression, which lasted for 15 years. Smoot-Hawley Tariff Act caused the Depression and kept us in the Depression. I was listening to Victor Davis Hanson, and for the first time I realized he's a fraud is when he made that comment. Oh, yeah, the Tariff Act didn't cause the Depression. I'm like, you're a fucking idiot, man. Yeah, it did because it raised costs and we got countered. So our farmers couldn't sell to the others because they came back and tariffed us. And he can say this and that and whatever the hell he's saying. That was the cause of the Depression was the tariffs because it raised cost. And then our farmers couldn't sell corn and wheat to Europe because they raised the prices and the people couldn't afford the price increases. We couldn't sell our wheat and corn, so we couldn't pay the banks back, and boom, 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 one thing led to another, and all these businesses closed because of the Tariff Act. See, when people don't know what they're talking about, they better be careful because people who do know what they're talking about hear that, and we know he's a fraud. Hey, Pat, how are you? How's Singapore? Are you guys going to start manufacturing because you don't have tariff? You're going to get all the Chinese goods because they're tariffing? Singapore is terrible? Why is it terrible? You got all the gold. So the Dow's down to 38,000. It's actually up 500 today. We saw Bitcoin at 77,000. And we see gold running down to 20. And again, it's more profit taking. It's only the US, 29.86 and silver 29. So it's a great time to buy silver and gold. 29.86. It's a 12 o'clock. So you got to watch these like 8 o'clock, 10 o'clock, 12 o'clock is when they do their derivatives, but nothing to worry about. So I'm asking if you have Bitcoin, at what point it's down to 77, do you start worrying? And if you're in the market, it's 38,000. What's 37? At what point do you start worrying? Or do you just think it's just going to pop up automatically? We'll ignore the tariffs. We'll ignore the higher cost. We'll ignore the bad economy. We'll ignore the inflation, which is really money printing and not prices. Let's ignore all that, and we'll just hope the stock market goes up and Bitcoin goes up. Pat, the Prime Minister said that the Singapore economy is going. Yeah, I saw the Prime Minister. I saw his video yesterday. I don't think I liked it as far as liking or not liking. You know how you like it on YouTube. But I did see it, but well, just you gotta. Here's the thing I wrote. This is from my master's class. You need low taxes. It's a very easy formula. You need free trade, most important, law, gold, and good communications. Why are we not following this? Then I got up here. If we look at this one, the Adam Smith view, outlaw slavery, adopt free trade, rule of law, adopt the gold standard, laissez-faire, which is get the government out, and low taxes. And look who became number one, England, from 1821 to 1914. This is what the U.S. did. Why are people getting away from Adam Smith and going to John Maynard Keynes, who hasn't been right about anything? He caused the Great Depression. I don't get it. It's very simple. There's 5 things you got to do. That's it. But the governments are too corrupt, and George Soros is still looks like running everything and running it all into the ground, which is his game plan. Let's see. I love when a guy like this comes out. This guy's an idiot. Sell the rally. You shouldn't even be in the market. You should be in gold and silver. And you don't sell the rallies in gold and silver. Let's see. What is this? U.S. gives 104% tariff to China. They're just going to go have Japan or Vietnam or Korea sell the goods. Trump's so stupid. And what does he think to gain out of it? He's looking at, we'll get more money in for tariffs to pay off the debt. But you won't. And you're going to kill your economy because things will be expensive. And if they're expensive, we can't buy it. We don't have money and the economy drops. So I don't know what he's doing. I love this. Like some guy will say, are tariffs bad for the economy? We all know they are because costs go up. Not necessarily prices, but costs go up. Here's one. Ex-McDonald's employee warns not to order. It's all garbage you're eating. Most of it's poison, the food. Let's see. All right, let's look at this one.
I'm probably the only person online who shares every single one of my trades completely for free.
Sure you are, buddy.
Slice of pension and hot.
今天是3月27日，星期四。
Here's Shanghai.
首都国际机场第3航站楼。
Today is Thursday, March 27, and I'm at Terminal 3 of Beijing Capital International Airport. This airport was once among the busiest in the world, crowded with people, shoulder to shoulder. You could barely find an empty seat. But just look around now. Store after store is either closed or out of business. The current scene is bleak. Even at the state-run duty-free shop, there are more staff than customers. What does that say? It shows how strong our service mindset is. VIP service with no wait times. Just to clarify, it's the afternoon, not the middle of the night. So, what do we take away from walking around here? If this is what booming looks like, then saying China's growth is at 5% this year feels too modest. I say we could easily hit 10%. The vlogger sarcastically referred to the current economic decline as booming and mocked the official 5% GDP growth target, suggesting it was too modest. He expressed doubt about the official forecast, implying that the situation is worse than reported, and ironically suggested the growth figure of 10%.
倒闭了，全倒闭了，看看，我的妈，这全倒了，你看这。
Everything's shut down. My goodness, it's all gone. Just look at the entire mall. On a single floor, only 2 or 3 stores are still open, and the rest are closed. The place is practically
This is what you call no market. So what do we talk about a lot? I talk about markets, and I talk about I can only sell this if I have a buyer. That's a market, right? Somebody sells something that somebody wants and somebody buys it. What do you have in China now? You don't have a market. The market's broken. There's stores with no customers, so nobody wants to buy. Nobody has money. They can't get the money out of the banks because the banks are stealing it because they're losing money. So are you really worried about China? And now Trump with the tariff, what's he doing? Basically he's nobody working now. What is he doing with the tariff? You're gonna get 104% of zero, right? Trump's target hits 104%. They're not making anything. Everything is leaving China and it's going, and there's a lot in Vietnam, and I don't know, Pat, if there's a lot in Singapore. Let's see if I can get to your prime minister one. I did see it. $69 tariffs hits China's trade, and well, it's up to 104 now. Oh, I know, I saw it. Well, I can't see it right now. Yeah, I can't see it, but I did watch it anyway. There was a good one on I think it was yesterday from Mark McGuire, who basically says what we say. Market's crashing by gold, but we'll play a little of it. So this is will gold survive? I'll keep looking, Pat, for that. Singapore PM speech. Okay. Yeah, so this one. Yeah, I mean, we'll play a little of it, but we know what it is. Well, this is the new one.
I'm probably the only person online who
again,
shares
this
every
moron.
single one of my trades completely for free. I live
trading system and the world economy. So let me explain.
This is Singapore's guy.
First, the reciprocal tariffs are a fundamental rejection of the WTO rules.
Who cares?
One of the cornerstones of the WTO multilateral trading system is the most favored nation principle, or MFN. Most favored nation sounds like giving special privileges. Actually, it means the opposite, that every member must treat all other members equally. In other words, if a country extends more favorable terms or imposes additional restrictions to one trading partner, it must do the same to all other WTO members.
All right. So if you would just use Austrian economics and follow these 5 guidelines, if you just do this, you would treat everybody the same. Free trade means for everybody. Low taxes is yours. Rule of law, keep it from corrupt. If you use gold and you use free trade, you wouldn't, it's like people buy my Teaserking picks. Great. I don't care what color they are, what religion they are, and they could be from Mars. It's fine with me. I treat them with kindness and respect. Thank you for buying. Thank you for coming to the site. Thank you for asking questions. That's how you should treat your people, especially in business. You treat your customers like that. You don't piss off your customers, and you don't serve only, people with red hair or something. But that's what he's talking about, is how you shouldn't have anybody favored. It should just be, here's what we do, free trade. You want to trade with me? Free trade. If you don't want to have free trade, I don't want to trade with you. I'll find somebody who will. The Titanic is breaking up now. That's why we're in gold and silver. We do two things. We get to the lifeboat off the Titanic, and we turn paper money into gold, like Rumpelstiltskin. I love that Rumpelstiltskin guy. Now you can go this way, where you get mantle cards, but this would be after you buy your gold and silver. I would probably let gold run up, and then I'd buy a mantle card if I want to diversify. This is because I bought these in the early 90s when I started collecting with my ex. And, so I got smart and said, well, wait, I should be buying these older cards, not the 1995, cards. So that's why I went into the Mantle and Maze. I got 65. I got 61. I got a nice 61 Maze. I got a 60 Maze, I think, but it's not as good a condition. It's good condition, but not like this. So you want to get into things that are limited, high demand. That's why you get into Mantle and Maze. There's high demand. You don't want to get into things where where you're worried about demand. That's why you buy a Rolex watch. There's demand and low supply. But you be careful with certain things because you're not sure if there's demand for it. As I tell people about Joe Burrow, and I warn them, be careful. He's good and there's demand, but if he doesn't win a Super Bowl, the demand isn't as strong like Dan Marino as it becomes for Mahomes and whoever wins the Super Bowl. Not that Jalen Hurts has a chance. All right, a little bit more of
There are some carve-outs and exceptions.
Pat and his
MFN rule,
PM.
for example, to allow free trade agreements. But MFN has long been the bedrock of the multilateral trading system. It ensures a level playing field, prevents discrimination, and enables countries, big or small, to compete fairly in global markets. This has helped to liberalize trade amongst more than 100 WTO members, each with different economic and political and social concerns. America's new tariff regime is a complete repudiation of the MFN principle. It opens the door to selective country-by-country trade relations based on unilateral preferences.
Okay. I'm going to get to Mark McGuire. So I don't really, we get that. But I'm not interested. He's probably mad that he's getting tariffs. All right. So Mark McGuire had a thing on yesterday. All right. Will gold survive the crash? Well, we already know the answer. It'll be the only thing that'll survive it. But he had a few good points here.
I'm probably the only person online who shares every single one of my trades completely for free.
Nobody cares, fella. Nobody's stupid enough to buy stock now.
It's the understanding of the difference between.
All right, Mark, alligator here.
Which, quite frankly, so few people do understand.
Including you.
It's been growing really quite rapidly. I've now got over 13,000 followers. The reason I want more is I want more people to protect themselves from all these dangers, which we can now beginning to see accelerating. And I think collapse in equities, which, I've explained why and all the rest of it, that's happening. That has very, very material implications for every saver, everyone with wealth to protect. And so I would urge everyone to think, about educating themselves about that. I mean, I think there are other sites as well as mine, though I ain't going to claim mine as the best.
Well, I'm going to put a link in the description below to the McLeod Finance Substack. I've read some of your work. It is super in-depth, super informative, so I recommend people check it out. Thank you once again, Alistair, for coming on and sharing your knowledge with the audience.
Thank you, Jesse. Thank you for having me on.
Thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver Gold Osmium. Give owner Ian Everard a call today to take advantage of their special Silver Kangaroos 2023 mint fresh 1 ounce coins for $2.47.
Idea that, they and also at that time we had the Smoot-Hawley Tariff Act. But the difference really between Smoot-Hawley and now is that in those days, something like 2 or 3% of American GDP, I think, was imported. That's not the case now. Consumers are very, very dependent on imports. And of course, you've also got supply chains. I mean, look at Microsoft, for example. Look at Apple in particular. Apple, they do the design in California, but everything else is outsourced, out to the Far East, China in particular. So this is actually very, very serious. It's a lot more serious than what led to the decline in Wall Street from the high in September 1929 to the low in 1932 of nearly 90%. This is more serious. It really is. And not only that, but these tariffs, and I mean the market's initial reaction rather confirms this, these tariffs are basically driving the global economy into recession, slump, depression. I don't know what we'll call it.
Depression.
The consequences of that, of course, are that tax revenues will disappoint. Welfare costs will be higher than anticipated. Government finances will take this very, very badly at a time when government finances are actually in a debt trap. So you then have to ask yourself the question, well, how does this affect interest rates? Because everybody's assuming that interest rates will go down. The Fed will lower interest rates because they have to, and they're going to have to rescue the economy. So, it's the Keynesian playbook, but it's complete rubbish. In fact, the correct way to look at this is the way the foreigner will look at, say, his investment in US equities. They've got something like 14, 15 trillion, depending on valuations.
So what he just said was there's $15 trillion in their stock market that is not U.S. It's Europe, it's Asia, it's whoever that they're going to pull out. Now, how is that going to affect your stock? Excuse me, when 15 trillion gets pulled out, right? That's all sells. There's no buys. That's why I want you to stay away from the gold and silver stock miners, because they're going to sell everything. They're not going to just say, get me out of Apple and Tesla. They're going to say, sell my portfolio. I don't want to be in US dollars. I need to be in gold and silver. And that's where the demand for gold and silver, that's when we see the frenzy happen. What was I showing the other day? The frenzy. What was that video? And you saw the frenzy, and I say that's where gold and silver jump through the roof, is the frenzy that'll happen once the foreigners pull their money from the market and the housing market and from the banks. Wherever the foreigners have their money, they're going to pull it out and get it back in. Now, it's tough in euros because they're not worth anything, and British pounds are not worth anything, and won and yen, they're not worth anything, and ruble, they're not worth anything. So at the end of the day, you have to pull it into gold and silver. That is your only hope. So this is the point. This is the problem. So we're looking for the frenzy of, I need a lifeboat, and that's when we're going to see gold and silver really go. But when they pull this, 15, 20 trillion out of the market, what happens? The stocks crash, the banks crash, And then they end up in gold and silver because gold and silver is where they're going to put it. This is where I'm
Invested
explaining
in
the frenzy.
US equities. That is a hell of a lot of investment. Now, they're not going to hang around while a bear market rages and just sort of sit on their position. No, they're going to sell it down. They're going to panic out. They're bound to. And are they going to go and buy US treasuries and corporate debt? You know, the risk-free alternative? No, as far as they're concerned, that's not the risk-free alternative. The risk-free alternative is to get into cash in their own currency because they're running balance sheets in their own currency. If they're going to see no risk at all or minimal risk, it's got to be back into their own currency. It doesn't matter how bad the currency is. That is where the buying is going to go. We've seen this reflected already in the dollars trade weighted, which, I mean, you look at the chart of that, it's awful. I mean, that's the only description I can give it. It fell 2% yesterday. It's like more than 2%. I mean, it's steadier today. But, you know, there's no doubt, looking at the chart, that's going to go below 100. It's currently 102. Going to go below 100, and it's going to be on its way to 90. And, you know, we see what happens then. I mean, allegedly, Trump wants to see the dollar lower. He's going to get his wish. But this is very, very bad news because how does the foreigner then get enticed back into the dollar? I mean, the answer is you've got to offer him an interest rate to entice him back into the dollar.
Let this soft mineral melt in your
Not
mouth
if the
to rebuild
dollar's
your gums and
worthless.
teeth and never need a dentist again. Did you know there is
You've got to offer him an interest.
See, this is where Alligator doesn't know what he's talking about. Why would he get back into the dollar when the dollar's worthless? He's not. He's got to go into gold and silver, not into the dollar. That's the whole point. How he misses that is when you have doubt that he knows what he's doing.
Rate to entice him back into the dollar. You then look at the consequence of interest rates on the debt trap. And oh dear, this gets worse and worse and worse. In other words, we're getting into this sort of maelstrom, if you like, whereby everything's going round and round and round and disappearing into the black hole of nothingness. That is basically what's happening. And it's happening to the value of credit. You cannot reduce the amount of credit outstanding without banks or businesses going bust. That is the way outstanding credit gets reduced. If it's not going to get reduced that way, then it gets reduced in its value. So what will happen is that the Fed will be pushed into interest rate policies, which basically destroy the dollar. And we're just in the...
They're already destroyed, Alligator.
And as for the commodities, this reaction actually is completely wrong. But it's understandable, being the first, if you like, the initial shock. And bear in mind also that there's still quite a bit of leverage in the US equities. I mean, if you look at the FINRA numbers, I think in February it was it was a short $1 trillion of debt, leverage in the market. That's getting caned, absolutely caned. So you can see that this is not good. It really is not. And first reaction to hit everything, including commodities. I think that the swaps, if you like, in gold and silver and in other commodities, the other futures commodities, are understandably trying to close down their positions. So they bash these prices, they bash them down. And of course, nobody wants to challenge them at the moment. They will manage to close some of their positions at a lower price. I don't think they will in gold. There might be some, but I mean, gold is interesting because on COMEX, there's less than 500,000 contracts outstanding, which is not an overbought situation, if you like. You don't have all these hedge funds long of gold, short of dollar. No, they're not at all. So the amount of stuff that's going to get shaken out on the bull tack, I think, is going to be disappointing as far as the swaps are concerned. Different position, obviously, in silver, because you haven't got central banks buying silver, which effectively is the backstop on gold. And on that basis, this is why silver has fallen by 6%, 6.95%. I see on my chart today, having had another very big fall yesterday. So that, I think, roughly is where we are, Jesse. It's interesting times. I see this in two phases. I see the initial shock, and then I see people looking at things a little more rationally, and then looking at the opportunities. And to my mind, the opportunities are quite simple. Because it's the dollar going down, buy commodities, buy precious metals. But it's going to take, if you like, things to settle down a little bit before people seriously consider that.
Hey guys, just a quick break to hear from our sponsor, ARC, silver, gold, osmium, for all your
investment managers to do. And anyone who passes a CTA exam knows that, the way risk works in a portfolio is the balance between equities and bonds. Commodities are never mentioned. It's just not part of the whole scene. And indeed, physical commodities are not regulated investments anyway. So, the establishment, and we're really talking about the investment establishment educated by governments and by their regulators and all the rest of it, had a very, very clear and simple response under these circumstances. And what this means is that where you got losses, basically you sell anything else in order to cover those losses. And that's what we're seeing in markets. And of course, the shorts in futures are, making hay out of it. I mean, they really are. That's why we got 7% falls today after 5% falls yesterday. But what we saw at the time of the Great Financial Crisis, I think we see again. At the time of the Great Financial Crisis, we saw gold get knocked from about $1,000. It got up to something like 1,050 or something. It got knocked from there down to about 680, and that was more, more spread out than this current episode. It took, 3-4 months for that to happen. But once that was over, gold then went on up to 1920 in late 2011, because you had the knock-on effects, if you like, of the Great Financial Crisis. Particularly, you had, if you like, European debt problems and all the rest of it. Various crises in Europe, which sort of rolled and rolled and rolled. And of course, everybody wanted to get out of credit and get into safety, which was really what happened. This time, I think the situation is actually far, far more dangerous. We might see the authorities trying to steady the equity market. That wouldn't surprise me at all. But look, what we're seeing is the largest credit bubble in history going pop. And it's going pop in exactly the same way as a lesser credit bubble in 1929 went pop, with combination of that and tariffs. Smoot Hawley Mark II, I'm calling it. I think that rather like in 2000 and late 2008, the initial shock takes out everything, and then people sort of think, hold on a minute, gold is actually where we should be, not in credit, as it were. And I think we're already getting, this is not something else. This time, we've got central banks doing it. Central banks are buying gold. Why? They're actually selling credit. They're getting out of paper currencies, getting out of fiat currencies. It's a big, big message which we've got to hoist on board. That is the difference between 2008 and today. And of course, they don't buy silver, which is why silver goes down. They don't buy copper, which is why copper's going down. And they don't buy oil, which is why oil and energy is sinking. But that will turn round, because over long periods of time, the purchasing power of gold is very steady when it comes to buying these commodities. So, all this is pretty temporary stuff. I'm not giving a steer in terms of timing. All I will say is that the downside in gold, I think, is extremely limited, simply because central banks are standing there just picking up any loose stock they can possibly pick up. So that's going to keep things tight in gold. We have a real crisis in the markets, and that is going to lead collapsing equity values. And I wouldn't be surprised if this crash continues next week, like big time. That sort of thing begins to affect the banks, because the banks have this stuff as collateral, equities as collateral. And not only that, I mentioned the leverage, around about $1 trillion of leverage. It's less than that now. I should think it's probably around about 850 to 900 billion. But on top of that, you got the commercial real estate problems and all the rest of it. I wouldn't be surprised if the next thing we see in a few
Hey,
weeks'
new
time
wine.
is a number of banks, if you like, being questioned about their survivability. The other thing, which is something that hasn't happened yet, is the collapse in crypto. That's going to happen. If you've only got to look at how Bitcoin correlates with NASDAQ. It's the same, or particularly the Magnificent Seven. It's the same cohort who are long of Bitcoin, who are long of those Magnificent Seven tech stocks. Watch that Bitcoin. I don't make investment recommendations, but I would not be surprised to see that as one of the best shorts at this stage in the market. So
we see Bitcoin down to 77, which was my initial question, is at what point do you start sweating your Bitcoin? We don't sweat our gold and silver. It's just going to go to the moon. There's no very limited and huge demand, and people are using it to offset some of the margin calls. But at the end of the day, there's only one place. There's only one lifeboat, gold and silver. But if you're in the stock market with your 401ks, or you're in Bitcoin and you see it dropping and dropping, 77,000 for Bitcoin, at what point are you worried? I know I can relate it to poker. I'm sitting there with I was sitting there with the full house. There was I think there was 3 aces on board, and I had a pair of 8s in my hand, and it was 3 aces, a 2, and a 3. And I said, well, okay, I think I'm good. I got 3 aces with 8s. There was one guy in, and he, and then he made a big bet. And then I started to go, shit, he's got the 4th ace. So at what point do you realize he's got the 4th ace and you lost, even though you had a good full house? And that's the point with Bitcoin. At what point do you realize you should have profit taked at when it was at 100,000, not being incredibly bullheaded going, it's just going to keep going up. It'll go up to 1 million. As I said, I can see the Willie Mays card, and I know what I got, right? I can see it. I can feel it. I can touch it. I can look at it. Can you feel the Bitcoin? No. Can you touch the Bitcoin? No. Can you see the Bitcoin? You can't even see what you have. How the hell are you spending 80 grand on it? Or at what point do you have 80, 90 grand into it, into nothing? It's not even real, and people are putting money in. Why? Because it's going up. Kind of fucking answer is that? It's going up. Really? Okay. Good luck to you. All right. So even but Bitcoin, at the end of the day, it's in the money. It's priced in dollars. And when the dollar goes out, Bitcoin goes out. This is the only thing that most of these guys don't understand, is the dollar's worthless. So you want to be out of the dollar. Now he's calling for Bitcoin, but he doesn't understand is still that the dollar has no value. That's the point Egon gets. And I'm not sure about Mark McGuire, but that's what all the BRICS countries got. They buy gold and silver because the dollar's worthless. They get it. We get it. A lot of these guys don't get it, especially the Americans. They're all Keynesians, and they don't, we'll just keep printing money. And for infinity, we'll just keep printing money. But the money won't have a value, you morons. All right.
Talking about the enthusiasm, if you like, that you get in the top of a credit bubble, is that's evaporating. And the consequences on values the whole way across the board can be catastrophic. So big warning to everybody.
Well, let's take a step back from financial markets at the moment and look at the potential impact of these tariffs on the American economy, because I've heard some different interpretations. One is, this is terrible. Trump has no idea what he's doing. He's just going to destroy the American working class. He's going to punish Americans the most with this. and he's basically incompetent. And then on the other extreme, I see people who say he's playing 4D chess. He's actually thinking about the long term, and he's willing to cause pain right now if it means in the future the U.S. is more able to service its debts. And this is kind of a way of doing that, almost purposefully creating a recession and crashing the market. What are your thoughts? Is this something that could have any positive benefits
No.
for the American economy if we look in the long term?
Free trade.
Or is this madness? Is it somewhere in between in your view?
Do not buy new windows if you live in Michigan. Americans living in
Okay,
zip
we
codes starting
won't.
with 48 and 40.
We'll
We
freeze.
look in the long term, or is this madness? Is it somewhere in between in your view?
I think the
Badness.
first thing I'd say is that Donald Trump is a real estate developer come hotelier. I mean, quite frankly, economics is not his bag. What he's done, I think, is he's gone back to the Constitution. The Constitution, before the days of income tax, used tariffs, if you like, as a means of paying government expenses. And so he's trying to get back to that. Now, I'm afraid that the situation today is not the same as it was before the First World War. It's very, very different. What he's doing is economically catastrophic, not only for the US economy, but also for various other economies. And I think, we just need to look no further than the members of the G7. The only G7 member which is not in a debt trap is Germany. And that's going that way anyway. So these debt traps are very, very bad news. And just for clarification, I mean, you get into a debt trap basically when your GDP doesn't match in terms of its growth rate. Nominal growth rate does not match the growth of your debt. If the outstanding debt is growing faster than your GDP, then you are in a debt trap. It's the classic definition. And when we hit a recession, slump, or depression, whatever that turns out to be, as a result of this combination of credit bubble bursting plus tariffs, then the consequences of that are that the debt trap intensifies big time. It really does. And the only way in which you can maintain the value of a fiat currency under those circumstances is to raise interest rates. But the problem is with a debt trap, if you raise interest rates, you make the problem worse. I mean, for some time I've been telling everybody about how we had the similar problem back in 1975, late 75, 76. Sterling crashed. The Americans came and bought sterling, supported it. Then they sent in the IMF basically to tell the government, force the government, if you like, to cut its spending, balance its budget, and then it could get it could close its position in sterling. It was an extremely profitable operation for the American government at the time. But we had interest rates of 15%. I remember 3 gilt issues of coupons of 15, 15 and a quarter, and 15.5%. Just imagine that in dollar terms today. That's where we're going. It really is. And that's scary. That is very scary. What's going to survive that? I mean, which businesses are going to survive that? Indebted businesses. I mean, it's going to turn the lot into zombies. What's going to happen to the banks who have extended credit to these businesses? What's happening to the banks who have taken on collateral, which is valued at current levels on the assumption that interest rates are not going to go up? I mean, this. I just cannot see that there is a will, if you like, within the political circles to actually address these issues head on and deal with them. They don't have a mandate to do it, called the Overton window, which is the new phrase. They can't open it wide enough. And I don't think they even know enough, getting back to what you were originally saying, questioning about, is Trump playing 4D chess? No, he's not. He hasn't a clue. And nor have all the others around him who is appointed as secretary of this and secretary of that. They've got no idea at all about economics.
Have you seen this post from Donald Trump on it's Truth Social, and it was also posted to X as well, basically telling Jerome Powell that he should be lowering interest rates. Jerome Powell's often too late. Now's the opportunity. Stop being political and cut interest rates. Do you think he's sending this messaging out there so he can blame the Fed for all of the negative effects of his actions? So we can say, I told Powell to lower rates, he's not lowering them, and so obviously that's the problem. Why would he do that, in your view?
Well, I'm sure that he will blame Powell for the problems that he has created.
Blame Biden.
Not Powell, but I mean, look, Powell has created a number of problems, but he's in a position where he hasn't actually been able to do very much other than what he has done. Because it's a political, I mean, the Fed is very political. It has to be. The idea that the Fed is completely independent and they can actually tell the US Treasury, go away, we're running this bit, you've got nothing to do with it, we will run this as we see fit. What? No way. This is complete political tie-up. And I think that I don't think necessarily that Trump is, being sort of devious. He's turning around and he's saying, I'm going to lay a marker so that we blame Powell when the whole thing goes wrong. I don't think he understands that it's all going wrong. I mean, okay, he's seen the market going down, and one of his guys, I'm not familiar. The names aren't imprinted in my rather small brain yet, but one of them was saying, well, of course, you're going to get this sort of turbulence in the markets because there are lots and lots of companies which have been ripping off America, and of course, things are not going to go so well for them, or worse than America. I mean, honestly, you'd think that they planned this all along. They know what they're doing, and
No, we know they don't know anything.
You can join my free WhatsApp group and see everything for yourself. Every trade, the exact
move, and inventories of the LBMA are getting low on a historic basis. I talked to Mario Ineco about this, Ed Steer. This is a topic that can get quite hyperbolic. Could you describe what you're seeing when it comes to outflows from London? Are these moves as meaningful as many are saying?
Yeah, they are meaningful. I mean, the people within the system are trying to dismiss it by saying, well, actually, all it is inventory is moving from one place to another, but it's not really changing. I don't buy that line at all. Basically, the first thing that happened was there were significant premiums on the futures market on COMEX. And this set in train an arbitrage, which basically cleaned the liquidity out of London, Switzerland, and even Mumbai. Gold held in bonded warehouses, not yet entered and therefore not yet taxed, went to London. I mean, it's the most extraordinary thing. So you have to ask yourself why, and the story was that there was the threat of 25% tariffs on gold, silver, everything. Now, I didn't really buy into that story. I could understand why it would trigger concerns that there would be a possibility. Yeah, I can understand that. But there was something else there, and I think it's to do with the stands for delivery on COMEX, because I've been monitoring these for the last 4 years or so. And particularly since Trump was elected, the pace of these stands for delivery in both gold and silver accelerated very, very substantially. To give you a clue, in the last year, 2024, the stands for delivery were a little over 2,000. No, hold on there. I think it's 400 odd tons, something like that. The 2,100 ton figure I've got in mind is actually for the last 4 years, up until 2024. What has happened since then is the pace of these stands for delivery has accelerated. Now, with stands for delivery, we don't know, but the experience suggests that if you actually want to take position or stand for delivery, it's actually quite.
All right, the governments will stand for delivery. All right, it's enough of alligator, but basically, people are getting out of dollars in the gold. It's as simple as that. I don't know why they make such uh, hard things about it. All right, let's see where gold's at. 29.78, silver 29.73. So they're just, it's not profit taking. There's no such thing as profit taking in gold because you don't take profit to get back into the dollar. As you can see, Bitcoin is down to 76,000. And as I say, I bet the market's now negative. Let's see what the market's at. And it was up 700, 800, and now it's only up 60. U.S. economy adds jobs, which are just government jobs, recession fears. We're in a depression. We're not in a recession. Yeah, I mean, the tariffs just raise costs, so we know that. But as they have to do margin calls, so look at this. The Dow's now down to 37,000, headed down, 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 and Bitcoin's down, down, down. And at what point do you get out? Why are you in the first place? Because my Uncle Joe's in it, so I'm in it. I have no idea. I don't know how to play, but I'm just going to play because it's higher. Now, what do? Bitcoin's 77, and all that money is going to go into gold and silver because it's the only place to go. New wine, they're just go down with the Dow Jones and other industries. Yeah, exactly. Well, they're not dragging gold down. What they're doing is they need to cover their margin calls. So when you sell when the stock market goes down and you're on leverage, you're on margin, you have to cover it. What do? Well, you sell your assets. Well, so they have gold futures that they have that's been making good money, and so it's just going down is the future of it. But the question is, at what point do you watch gold? Do you watch the stock market at 37,000? How long do you wait till you get the hell out of it? Because you don't even know why you're in it just because it's high. And that's the problem. All right, let's go to baseball. Basketball, we kind of talked about a little bit. Basketball again, Florida won at the end. Houston, we bet the game under. Beautiful. So we're pretty much done with that. Now there's no other. Let's go to the scoreboard. All right, Detroit won, the Yankees 0, bottom of the second, and then upcoming at 4. So there's one game at 1 o'clock. I don't know why on a Tuesday Detroit would play at 1 o'clock. Like, aren't people working? How many people are going to the Tiger game? And they're very expensive, the tickets. I would never go. You'd have to give me a free ticket, and then I would park at MGM for free and walk. It's about a 5 to 6 minute walk. I've done it before. And then I go back to MGM and play poker. So I don't know why anybody, the Lions are even worse. They're really pumping up their ticket prices, really taking advantage of demand. Now, I mean, business is your supply and demand, right? What will the market bear, right? So if I'm the Camry, the market says I'll pay 25,000, and they push their price up to 35,000 for a Camry. Well, nobody's paying it. So they got to lower their price back. That's why we're in control. We're the market. So at the Lions game, the market's maybe 100 or 200, and they're pushing it up to 400 for the tickets. It's $400 at a Lions game. You got to be kidding me. I'd be buying 20 ounces of silver with it. So it makes it very difficult. Is the market really up 400? Or are they going to have empty seats? And here's where they're trying to push it to 400. So this is one of the few places where the demand's high. So they're raising ticket prices based on demand, not based on tariffs, not based on inflation. They're basing it on demand. And they sell out because people here are a bunch of idiots and they've never seen a winner since 1957. Except for Barry Sanders, you had 1 or 2 good years. So basically, the team sucks because the management sucks and the ownership sucks. They don't know how to hire a coach. So they got lucky. They hired a coach. The team sucks. So the GM looks like he's good because he had nothing here. So anybody he drafts is going to be good. So he got lucky with a couple guys from Alabama. He got lucky with Goff. And you got running and receiving, so it's a balanced offense. Okay, so he was smart enough to do that. But now it's the hard part. Now you've got pretty good talent. Now what are you going to do? So none of your players are going to make the team now, so maybe you're not so good. You're good when there's no talent. So, but they're jacking the prices up. It's absolutely ridiculous. You just can't do that. You can't, you've got to listen to the market. And yeah, maybe you could get 400 a game, but you shouldn't. You should maybe go slowly up to 300 and then slowly up to 400. So this is the problem I have with these guys. All right. So Detroit 1-0 in the second. We've got Miami and the Mets. The Mets minus 300 over under of 7, which is very low. Connor Gillespie 0-1 with the 3.60 for Miami. Clay Holmes 0-1 with the 2.89 for the Mets. I don't really see a 7 over under of 7 in this. I'm not quite sure. I see the Mets as a minus 300. Holmes is 0-1 with the 2.89. Maybe he's good. Gillespie, maybe he sucks. I'd have to go over 7 here. I don't see 2 pitchers making me think there won't be runs scored in the game. The White Sox and Cleveland, after watching the White Sox against the Tigers on Sunday, I've never seen a more pathetic team in my life. The GM should be fired. The coach should be fired. The pitching coach should be fired. He brought in 2 pitchers that were absolutely horrible. In the 9th inning, you got a 3-1 lead against the Tigers. And I think it was 8-9. It was like 9-1-2 are the batters. He brings out this lefty because I guess the 8th hitter was a lefty, the 9th hitter was a lefty, the 1 hitter was a lefty. So he brings in the lefty to pitch to him. The lefty can't throw a strike. Somebody's on first when I got there. He walks the next guy on like 10 pitches. The next guy, the leadoff hitter, he walks on 4 pitches. The second hitter, he then walks on 6 pitches. Why is he still in the game? Oh, because he's left-handed. And this is my whole thing on lefty to lefty. Yes, while it might be harder for a lefty to hit a lefty, and it might be an advantage for the left-handed pitcher to pitch to a lefty, if the guy can't get the ball over the plate, it really doesn't fucking matter, does it? That's why you go to your best pitcher. And believe me, Bob Gibson or Steve Carlton or Sandy Koufax, it really didn't matter. I watched Sandy Koufax in the 65 World Series strike out Mickey Mantle. He didn't have a prayer. Fastball, that slow curve, fastball, Mantle didn't touch the ball. Did it matter that Mantle is batting right-handed and Koufax is left-handed? Absolutely not. That's why I think this is way thought out, way too much, this lefty-righty thing, especially when your left-handed pitcher sucks. Then they finally go to the right-handed pitcher, and he sucked even worse. So I'm not buying it, but the White Sox are horrible. Shane Smith, 0-0 with the 3.18 for Chicago, and Ben Lively, 0-1 with the 6.75. I swear, baseball now is the worst I've ever seen. The players are horrible. The hitters, I'm watching Chicago's hitters didn't even know what to do. The pitchers grooving the ball, couldn't get a strike over. This is not Major League Baseball. I don't know what the White Sox are. They're like the high school team we tease about in college football. They're terrible. I doubt they could beat the college teams. Cleveland, they should be better. Cleveland minus 210, 7.5. Yeah, Chicago. Yeah, Cleveland's definitely going to win this. Chicago, if you get to the bullpen's terrible. So fire the GM for having these pitchers on the thing. Fire the manager for going to these pitchers in the ninth inning with a 3-1 lead. Fire the pitching coach for not being able to train these pitchers. How do you have a pitcher? He walks a guy on 4 pitches with the bases loaded, or first and second, or whatever. Unbelievable. And then they finally go to the righty because the righty was up, and this guy sucks, Torkelson, and he underhands it. I mean, I got girls on my fast pitch team that could have hit this thing. I just grooved it in, so the guy hits a single, and and then he win the game, and it's, oh, isn't he a great hitter? Yeah, no, he hit a pitch that was like lobbed in there. All right, anyway, so the White Sox are horrible. We're not going to bet them too much. In fact, they're our bets. That's what we look for. St. Louis and Pittsburgh, Pitt 135 and 6.5. We've got Sonny Gray 1-0 at the 5.73 against Paul Skane. Ooh, 1-0 at the 1.46. We go Pittsburgh with Skanes all day. That's our 5-unit. Take Pitt with Skanes 1-0 at the 1.46. That's what we look for is the stud pitcher. Actually, a major leaguer here. The Dodgers and the Redskins. We've got the Dodgers minus 175.9. Justin Robluski 0-0 with an 0-0 against Brad Lord 0-0 with the 4.50. Yeah, I think we just take the Dodgers. Now we got to see when Freddie Freeman gets back. Then we can bet him over a little bit more. Toronto and Boston. Boston minus 200 and over/under of 8. Easton Lucas for Toronto 1-0 with an 0-0. Garrett Crochet, who's supposed to be very good, 1-0 with a 1.38. Hence Boston being a minus 200. I think we can go Boston, or you can go under 8 in the game. California against Tampa at Tampa, so California had to travel. Tampa minus 170, 8.5. Kyle Hendricks used to be on the Cubs, I think, 0-0 with a 3.0 against Shane Baz, 1-0 with an 0-0. Hendricks is good. I'd say this would be an under game. Go under 8.5 here. Philly and Atlanta, which should have been a good game. Atlanta's but Atlanta's got Chris Sale. Wow. Philadelphia 102 and 7. Zach Wheeler 1-0 with the 1.38 against Chris Sale, 0-1 with the 5.40. I got to go under the 7 here. Sale's ERA is a little high, but we know how good a pitcher he is. And Zach Wheeler 1-0 with a 1.38. They did beat the Dodgers twice. 2 of the games were low scoring, and then when I went under, I went over. So I don't know that Philly's hitting, but they're not going to hit Chris Sale. The question is, the manager should leave him out there for 8 innings. Stop worrying about the guy's arms. The guy's arms, just stop throwing these screwballs and trying to work on the high spin rates that hurts the guy's arms. So stop doing that, and then you don't have to worry about 5 innings. So we're going under in the Atlanta-Philly game, under 7. Texas and the Cubbies. The Cubbies 160 and 8. Patrick Corbin for Texas, 0-0 with an 0. James Talion for the Cubbies, 1-1, 6.97. The game is in Wrigley Field. It's a night game. Let's go over 8 just because it's in Wrigley Field and it's a night game. Minnesota, Kansas City. We got Minnesota minus 102, 7.5. We got Pablo Lopez, 1-1 with the 2.25. Cole Reagans, 0-0 with the 3.60. Let's go under 7.5 and see what these teams are hitting. Milwaukee, Colorado. Every game's an over in Colorado. Milwaukee minus 160 and 9.5. Freddie Peralta for Milwaukee, 0-1 with the 2.08. Kyle Freeland for Colorado, 0-1 with the 2.13. So it's hard to go over 9.5 with these 2 decent pitchers. Yeah, we can take Milwaukee, I think. I don't want to go under there. Baltimore and Arizona. In Arizona, Baltimore 110, 9.5. Charlie Morton for Baltimore, 0-2 with a 9.72 against Merrill Kelly, 1-1 with a 10. Let's go over 9.5 here with these two superstar pitchers. Houston, Seattle. I don't know who Houston is right now. They're 4-6. Seattle minus 120 and 7. Seattle, I know can't hit. They got two hitters on the team. Rambler Valdez, 1-1 with a 3.75 against Luis Castillo, 1-1 with a 3.0. Let's go under 7 here. This will be our 5-star. Cincinnati and the 49ers. We got the Niners minus 137.5. Nick Lodolo, 1-1 with a 1.42 against Landon Roop, 0-0 with a 6.75. For some reason, the 49ers are a 130 favorite, but looking at the pitching, I got to go Cincinnati. It's a very live dog here. If they got a 142 pitcher going against a 6.75 pitcher, go Cincinnati. And our last game, San Diego against Oakland. San Diego 135, 8.5. Dylan Cease, we love Dylan Cease. 1-0 with a 3.38 against Jeffrey Springs for Oakland. 1-1 with a 4. 5-star. Let's go San Diego with Dylan Cease. And that be your baseball. Tigers 1-0 at the bottom of the third. Let's see what else we got. Anything in the NFL? See here, Denver Nuggets is doing what I say. They're firing their head coach and the GM. You've got to fire the GM because he's responsible for the head coach and the talent. And if the GM can't spot talent, he should be gone. That's why the Chicago White Sox need to fire their GM. And the same thing with the Bears in football. They don't know how many bad quarterbacks is the GM going to take. What? He went from Mitch Trubisky to Fields to Caleb. That's 3 strikes, you're out. At what point do you think this guy can spot talent? Because he can't. He could have had Jalen Daniels, and he could have had Penix, and he went with Caleb. He went the same thing with Fields. He could have had a better quarterbacks. Mock draft 8.0, Ward to Titans, Hunter to Browns, Prime Jr. to Ware. Travis Hunter is the betting favorite to go number 2 overall to Cleveland. That's a huge mistake by Cleveland. You do not draft a cornerback or a wide receiver, and he ain't going to play both with the second pick. That's got to be your defensive end, maybe a quarterback, maybe a running back. You don't draft a wide receiver. Do any quarterbacks join Ward Sanders in the top 50? I've given you that. Where's Dylan Gabriel, or is he not in the draft? I thought he was in the draft. Where's the kid from Indiana, Rourke? You got the kid from North Texas, and you got the kid from Texas State. That's 4 that are better than Ward in this. The kid from Ohio State, Will Howard, definitely a first-round pick. Even the Notre Dame kid, I wouldn't hate. Riley Leonard, I didn't think he could throw the ball, but when he was on Notre Dame and in those big games, he came through. That's what I'm looking for. Oh, yeah. Did Cam Ward ever come through in a big game? Yeah. No, he didn't. Sorry. Sample size of two-way success stories. And if you're drafting this guy because you think he's going 2 ways, you're out of your mind. Strengths, weaknesses, top 5 quarterbacks. Oh, let's see who the top 5 quarterbacks are. I can't wait for this. Cam Ward. He chokes. Prime Sanders is not a top 5 quarterback. Jackson Dart is not a top 5 quarterback. Jalen Milroe, are you kidding me? This guy shouldn't even be drafted. Oh, my God. And Tyler Shaw from Louisville is okay, but he's not Dylan Gabriel or my guy. So let's look at – all right, let's go to stats. Let me name the players. All All right. Fuck, I gotta go to college. All right, let's look at touchdowns. My top 10 quarterbacks are going to be different than yours. Will Howard, Ohio State, 35 and 10. Chandler Morris, North Texas, 31 and 12. Jordan McLeod, Texas State, 30 and 13. Dylan Gabriel, 30 and 6. Curtis Rourke, Indiana, 29 and 5. Dart was 29 and 6. Shoy Robinson, I don't know if he's in there. Baylor's quarterback, 28 and 8. Malik Murphy was very good, but he's not in the draft. Rocco Beck, but he's not in the draft. Owen McCown, keep an eye on him. This guy's great, 25 and 10, but I don't think he's in the draft. And Drew Allard, Penn State, don't love him. Sam Levitt, Arizona State, but he's not in the draft. Tyler Saw, 23 and 6. He's not a top 5. Joey Aguilar is pretty good. App State, 23-14. Riley Leonard was 21 and 8. But my best is Dagio Pavia, but he's not in the draft, 20 and 4. He should be the first quarterback taken because this guy's a winner. Cam Ward, 39 and 7. Now here's the problem with Prime Jr. 37 and 10, but 42 sacks. Will Howard, Ohio State, 13. Chandler Morris, 12. Jordan McLeod, Texas State, 17. Dylan Gabriel, 21. Curtis Rourke, 20. Prime Jr., 42. 42 sacks. What's going on there? You can't read the defense. Cam Ward, 22. Cam Ward, 39 and 7, but I looked at him at Washington State. He wasn't that good. And they probably switched offenses to a more passer-friendly, which is a college offense. So I'm not buying. I don't smell it. So why isn't Dylan Gabriel a top 5 pick? Dylan Gabriel, 14 games, 275 yards a game, 30 touchdowns, 6 picks. Can somebody explain what's wrong with him? Curtis Rourke, Indiana, 253 yards a game, 29 and 5. Jordan McLeod, Texas State, 30 and 13, 17 sacks. Chandler Morris, North Texas, 31 and 12, 12 sacks. Will Howard, Ohio State, 35 and 10, 13 sacks. Why are these guys not even being mentioned? And yet Prime Jr., 37 and 10, but 42 sacks. And they didn't beat anybody big in the big game that they needed against Kansas. He didn't show up, and they couldn't stop Neal from Kansas. And Cam Ward, 39 and 7. Let's go to running backs. Let's look at the top 10 in running backs. That's more my top 10. We'll go yards per game. So here's your top 10 running backs, right? Gentry, of course, 185 yards a game, 29 touchdowns. I don't understand this Omari Hampton being so high. 138 a game, 15 touchdowns is it. Tajay Brooks from Texas Tech is much better, 136, 17 touchdowns. Scadaboo, if he's eligible, and I don't know he is, 131 and 21 touchdowns. RJ Harvey from UCF, 22 touchdowns. Caleb Johnson from Iowa, if he's available, 1,500 yards and 128 and 21 touchdowns. Bryson Daly, the quarterback of Army, I would get this guy 32 touchdowns. Just give him the ball at the 5-yard line and let him run that wishbone and goodbye. Dylan Sampson, I love, from Tennessee, 1,500 yards basically, and 22 touchdowns. Devin Neal from Kansas, 1,266 yards, 16 touchdowns, most of them against Colorado. Let's see. Anybody else? I was high on Devin Dampier, but I realized he's the quarterback for New Mexico. He was 19 touchdowns. Jesus Christ. And that's it, basically. The rest of these guys suck. So there's your top 10. Gentry, Hampton, Brooks, Scatterboo, Caleb Johnson, Bryson Daly, Dylan Sampson, and Devin Neal are probably your top 10 running backs. And that's it. I mean, so really, and let's go to receiver and look at Prime Junior's guy. Do I want to take him? Let's see where the Colorado guy is. We'll do it by yards per game. And let's see. All right, the best guy's Trey Harris from Ole Miss. 128 yards a game, 7 touchdowns. Then a guy from Bowling Green, Fannin, 1,500 yards and 10 touchdowns. Let's see. McMillan, I don't know. He's like 1,300 yards a game and 8 touchdowns. I don't know why they're so high on him. Travis Hunter, here he is. 1, 2, 3, 4, 5, 6, 7, 8. He's the 9th receiver. 1,258 yards compared with Fannin at 1,500, Nash 1,300, McMillan 1,300. 15 touchdowns. Now, this is his longest catch. How could it be 109 yards? It's obviously a kickoff return or something, because it can't be a catch, because you can't be 9 yards deep in the end zone when the play starts. So, I don't know. Travis Hunter's, 100 yards a game, 1,200 yards, and 15 touchdowns. Okay, but not the best. All right. So let's wrap this up. Now, again, I did do one. I got interrupted by the internet, so this is the second video. So let's go back and see. Ended on our gold note, as always. Excuse me. Bitcoin, 76,000. And gold is 29.85. It got down to 29.75, and this just spiked up to 29.85. Silver, 29.92. So what you take out of this, when the U.S. has it, notice it's in the 3,000s when China and Asia have it, and then at noon, the U.S. started hitting the derivatives down, now 29.85. So it seems to be China and Asia have it. It's over 3,000. And when the U.S. has it, it's sitting at, they push it down. Now, how are they going to cover it? Because the Chinese are going to take delivery of all the gold derivatives that they're doing, and they're not going to be able to take to pay off the delivery. And these are central banks buying this. This is not me and you. I mean, you are smart enough to buy physical gold and silver. And let's see what the market's doing. So Bitcoin's in the mid 70s. When are you going to sell it, Bitcoin people? Let's see. The Dow is 38.2, so the Dow came back. It had gotten down to about even, and now it went up 250 points to 38.2. So it gotten down to 37.9. Now it's at 38.2, and I can't imagine why anybody's stupid enough to buy stock in this economy. Now, again, to briefly explain tariffs, the country selling to the U.S. pays the tariff, not the U.S. and not the customers. We do not pay it. GM and Ford won't pay it. China will pay it. So let's say steel coming from China, they got to pay the tariff on it. So what they're going to do is have Vietnam sell it to us. So the tariff's much lower. So all Trump's doing is he's saying China, but China's not gonna. They're not stupid. They're not gonna ship anything to us. They'll just find middlemen to ship it, like they were doing with Mexico and Canada. And then GM and Ford shouldn't pay more for the steel. They should find another place that sells the steel if they can. The fact of it being made in America has no chance because the labor wages are way too high, and the unions and the medical. In Japan or China, they don't have to worry about medical, and they don't have to worry about the labor. The labor is very cheap, so even the engineers and stuff. So they don't really have to worry about that. So I will leave you with that. So gold, yes, it's down a little because of the margin call, but it's still 5,000 an hour. It'll still go to 3,500 to 5,000. And again, Basel III, July 1st will just kill everybody not in gold, and it'll gold and silver will go through the roof because they'll have to settle. So nothing's changed in gold. This is fundamentally outside. This is the market crashing, and they need to cover with derivatives. And I'm shocked the market's up at all today, but it'll be down the rest of the week. What are we at, Tuesday? So that's what's going on. So any questions or comments? Go ahead. Otherwise, just you can get me at www.teaserking.com, where you can email me with questions and comments. So that's about it. Remember, tariffs are just a tax to the country selling to us, not to the consumer, not to GM or Ford. They don't have to buy from China if all this additional cost, if China's going to make us eat the tariff, then it's not worth it. So there's other countries that will make steel and aluminum and whatever else, their lumber. There's other countries that'll do it cheaper. So I don't really know what's going on. Something smells. This reminds me of, what does it remind me of? Some sort of movie where it's all a scam, right? And you realize it's a scam. What Trump's doing is a scam. And well, it's like Madoff. You didn't know what it was, but you couldn't figure out how you were making 15% every year. And it ended up he wasn't selling. It was a scam. And it's the same thing I feel with my bones, what's going on here. This is all bullshit. This is not real. And look out. It's definitely trouble. All right. With that said, have a nice night. Well, it's 2:00 here. So time for some lunch, time for the pool. And just, I'm not even worried about gold. It's, believe me, all the central banks are buying it. And, maybe this is the ploy that I'm saying is they're keeping the tariffs. It's crushing the market, but look what's happening. The gold price is going down. So if Trump wants to buy gold, doing the tariffs allows him to buy gold a little cheaper than he was doing it, which is probably the whole thing going on here. He knows the tariffs are going to cause the stock market to go down and the dollar to go out. I don't know what this has no relationship to the debt. The debt's the debt. The dollar's the dollar. The dollar's worthless anyway, so it really has no bearing on that. So be careful listening to some of these idiots. They really don't know what they're talking about. If they say we pay for the tariff, no, the country shipping it to us pays for the tariff. So anyway, that's about it. So have a wonderful day. www.teaserking.com, and I will talk to you tomorrow. All right. Take care, everybody.